Hello and good evening, everybody. This is Doc Severson with the 10X Tribe Tuesday night coaching session. Welcome aboard. Thanks for joining me here on Tuesday night, taking time out of your busy schedules, or perhaps you're watching this on a replay. Either way, thank you for joining me here tonight. I'm going to go over a topic that is very near and dear to my heart, and it's just the kind of the mental side of things that is required to make the jump to profitability. And so without further ado, I'm going to get into this material here. I'm going to spend maybe 25, 30 minutes on it, wrap it up. If you have any questions or if you have any topics that you want to bring up and you want me to cover live with us tonight, please feel free to chat that in, and we'll go as long as we need to tonight, but probably wrap it up within an hour either way. All right. So, without further ado, here we go. I'm going to hide myself down here in the lower left-hand corner, and I'm going to get right into it here. I'm going to skip the introductions. I'm hoping that you know who I am. How you doing out there? We got Marcos joining us. Happy birthday, Marcos. And Rob, welcome aboard. All right, so I'm going to start off with the problem statement. As a former engineer, a recuperated former engineer, I'm used to dealing with things in terms of a problem statement. There's usually a challenge or a problem. There's something you have to solve. And normally to solve something like that, you're not going to just hit it with one silver bullet. You got to have to chop it up into small little pieces to understand what to do to fix that. So this is typically how I do things. All right. And so let's define what the problem is. The problem that we're trying to solve is to improve our financial performance. And the challenges that you encounter depend on where you are in your progression to mastery. So I don't think anybody would argue with me that if you're starting down here as a beginner, so I'll put a big B here for beginner, that there is somewhat of there's a continuum up here to mastery. Even though you look at this, you look at somebody that's a master of trading. Oh, I just realized that I'm going to take myself off of here because I'm in the way. Okay, so if we start off as a beginner, there's a master up there, and there's some type of progression to get up to there. Right? There's a progression to get up to that level. You can't just wake up one day and do what's called a step function, and because you bought a program and then all of a sudden you're a master. It doesn't work like that, even though that's the way a lot of people try to sell you on. So there is a progression to get there. And what I want you to do is to listen to the progression that Bo Yoder came up with and I've applied here, and see where you think that you are. See where you think you are. Okay, so I'm going to park myself back in the lower left-hand corner again, and we're going to start out with the first phase, which is called mystification. So you're brand new to trading, you don't know how markets work, and you view trading as fun and exciting. This is how everybody gets involved in trading. More than likely, you joined in during the end of a bull market, you're unconsciously incompetent. You don't know how bad you are yet. Success comes easily, and maybe it's because you're just doing the same thing as everybody else. In the late stages of a bull market, this is very, very common. You just sort of stick your hook in the water and out come the fish. You're sizing a Lambo for your garage. So you go all in with everything that you have and you get crushed when the markets turn. I see this all the time. That's the mystification phase. Everybody starts there. Now, how long they stay there depends on how curious they are and how self-aware that they are to say, oops, maybe I don't know what I'm doing. Maybe I need to learn what I'm doing. And this took me a while myself. Okay, and that leads to what's called the hot pot stage. Now, we all know what the hot pot is, right? When you're kids, you're curious, you don't know what's going on, you don't know what's risky, you don't know what's dangerous, so you see something on the stove and you reach for it and you burn your hand. Ouch, that hurts. Same thing happens in trading. So originally you got crushed, but you're hooked. You're hooked on trading. You start to define your approach. You learn how markets move. You wait for your setup. You wait. And when it shows up, every time that you enter, you get burned every time. And you start getting timid. You start to think it's me, or you think it's somebody else and somebody's watching over your shoulder, right? So you decide that the problem is the strategy and not you. So you keep trying different strategies. And this is kind of the trap that I see a lot of people do, is they will study a strategy or maybe invest in a strategy or buy a program or you buy a book or something. And I give it 2 losses and then you're done. So for most retail traders, 2 losses and they're done. They're over here checking out the new, nice, shiny penny by somebody else. And so somebody else is showing how easy it is. And you're like, wow, this is great. So you commit yourself to that. You take your 2 losses and you're like, oh, well, this isn't so good anymore. And so this is the phase that I see everybody running into. They're just bouncing all over the place with their 2 lost trades. And you end up learning a lot of different approaches, but you don't have any depth to what you do. It's almost like saying that 10 years of experience is not 10 years of experience unless you're doing the same thing. It could be 1 year of experience 10 times. This is the hot pot stage, and it's difficult to break out of this. If you survive through the hot pot stage, you get into what's called the cynical skepticism stage. Every time you enter a trade, you lose. And you get to the point where you become cynical about it. You joke with your friends, hey, next time you see me taking a trade, take the opposite side. So you're convinced it has nothing to do with you. It's somebody else's fault, right? You're pointing all over the place. It's the Fed. It's the market makers. It's the brokers. It's the gurus. It's high frequency trading. Whatever, right? It's somebody else's fault. So when it's quite obvious when you run into somebody that's in this stage, because they're very negative. They tell everybody that will stop to listen why the markets are screwing them and why it's somebody else's fault or why it's their tool's fault or their broker's fault or whomever. It doesn't matter, but it's clear when you identify somebody in this stage that they're not taking ownership for their own results. It's somebody else's fault. Now, if you are able to get out, some people never leave this stage because they never take personal responsibility. They can't take accountability. They're convinced that somebody else is screwing them. And typically, people will quit if they can't get out of this stage, because otherwise you just keep dumping money out. And you become more and more negative, and if you attract what you emit. And so what you focus on will expand. If you focus on the negativity, you're going to get more negative results. Now we get into what's called the squiggle trader stage. This is stage 4. So somehow you've gotten past the cynical skepticism, and what you figure out, and this is the piece of logic that most technical professionals, whether they're in management, engineering, medicine, aviation, it could be anything, but it's typically somebody that has a technical career. And what they figure is, okay, so maybe it's me, maybe it's my approach, and what I just need one more study. I just saw somebody give a presentation on this study. It's the, algebraic calculus, inverted ratio, study or something like that, right? It's some kind of crazy thing. Somebody's come up with some different name, and it's the same derivative of price and volume that everybody else uses, but they've made it sound cool. And so you keep stacking these things on. And this is what happens, is that you end up with a little tiny price chart up here. It's all compressed up in here, and you've got all these studies on there, and you're all so proud of it. And it looks cool because all these studies look cool. But really what you have to understand is that each of these studies they're trailing indicators. And why are you putting up with trailing indicators? Why don't you just watch price itself? Whoa, nobody knows how to read price. Well, I beg to differ. It's just that you're too lazy to do it right now. So what you're doing is you're offloading reading price by bolting on one of these trailing studies. And so the problem here is that all of these studies will disagree with each other, and you end up with analysis paralysis, right? So if you catch yourself thinking that, well, all I need is just one more study, and then everything would be fixed. This is traditionally what you're doing is you're trading not to lose instead of trading to win. This is scared money. Remember that. You're trading not to lose instead of trading to win. You guys have heard of the phrase prevent defense, right? Like a football team will be up big on the score and then they lay back on their heels and play prevent defense. Isn't that just annoying as hell to watch that? Because you could just see the momentum switch. All of a sudden, the underdog or the team that's down, like, oh, these guys have given up. These guys have rolled over. They're playing, they're playing not to lose. And so they're back on their heels. They're not leaning forward. For an example of that, look back in the Super Bowl a few years ago between the Atlanta Falcons and the New England Patriots. Falcons were way up at halftime. Should have walked away with that game. But what did they do? They played not to lose instead of playing to win. The Patriots played to win in the second half, and they took it. This is where I find the majority of traders stuck in this area. They've sort of found themselves. They've sort of found what they like to do, sort of. But they're still trading not to lose. They haven't really embraced risk yet. And you can tell by the way that they're using their charts to make decisions. This is scared money in action. Okay, so that's stage 4. This is where I see most people stuck in here. They just can't get out of this. And to get out of this, what they need to do is to become inwardly bound. They need to realize that it's not the strategy, it's not the stock, it's not the instrument that they're trading. It's nothing to do with that. Right? You could give Jimi Hendrix a Sears silver tone guitar that cost $49 from mail order, and he would make it sound like Jimi Hendrix. It's not the instrument that you're trading. It's not the mechanics of it. It's you. Understand that all of this revolves around you. All of this, really, you're trading versus yourself and not versus the market. Most people don't understand that your biggest adversary is you and that little conversation that's always going on in your head. This, to me, is the holy grail of trading. Once you understand this, all of a sudden, everything clicks into place and you're like, I get it. This is where you start to trade to win instead of not trading to lose. This is what's called inwardly bound. This is where you realize that you are the difference. So we'll talk about some of the techniques to get to that point here today. All right, so a lot of you will say, well, that's great, but can I just skip those stages? No, I didn't cover the mastery stage because to me, if you hit inwardly bound, which is stage 5, you've got it. You're there. You got over the hill. You're pushing a rock up the hill like Sisyphus in stages 1 through 4, and then stage 5, you get it right to the top. It's up to you to push it over the edge. So I've never seen anybody skip a stage, and this is the way that our brains work. This is the way that we're taught about risk. This is the way that we process risk in the live markets. So let's get into the 7 steps right now. And so you can frame this whole reference around the 7 steps, around this progression. Okay, so step number 1 is you have to think differently about risk. This is very important. I mean, if I were to say to you, what's the first thing that comes to your mind when it comes to risk? I would say most of you have a negative connotation on risk. Right? It's, if you say something like, okay, good versus bad, black spy versus white spy, Which one's good, which one's bad, those kind of things. Everybody has a preconceived notion of that. Now, this is Alex Honnold, and he's probably 2,000 feet off the floor of the Yosemite with no ropes, just his hands and his feet. What do you think it makes? What's his definition of risk? It's probably quite different from you and I. So the first thing that we probably need to agree on is that most people think that risk is bad. Chances are good that everything that you've done since you were a little kid has been to remove risk from your life. The school major that you chose, the spouse, the place where you bought your house, your career, everything, for most of us, most decisions have been made to remove or reduce risk. Yes? So this is the way that we grow up. Jimmy, don't run in the street, you'll get hurt. Oh, don't play that game. Don't play tackle football, you'll get hurt. Don't do this, you'll get hurt. Wear a helmet, you'll get hurt. So we grow up with this sort of like sheltered, for good reason. I'm not saying that those are bad. But then we carry it into the financial markets as if nothing has changed. So we come on with our helmets and, we stick our toe into the water. Is this right? What do you guys think? We take the same approach as everything else. The same attitude that risk is a bad thing and we should do everything that we can to avoid it. And it doesn't work that way. It can't. You have to think differently to win as a trader. You got to quit trading not to lose. Okay, so we gave this example here, the prevent defense. New retail traders don't trade to win. They trade not to lose. And I want you to, if there's one thing you can remember from tonight, remember that. Challenge yourself. Trade to win instead of trade not to lose. So fear rules our decisions. A lot of people talk about when it comes to markets, there's fear and greed. I don't believe so. I believe it's entirely fear. I don't believe greed really rules markets all that much. It's fear of missing out. It's fear of loss. Fear is the much more powerful of the two. Few people get into a position where they can actually be greedy. And really, it's not greed. It's more of complacency rather than greed. So if we focus on not losing, what do we get? We fear that rallies will leave without us. That's fear of missing out. We fear that sell-offs will destroy our account. Fear of loss. Fear rules every retail investing decision. So what we do is we eat like a bird and crap like an elephant, right? We're trading with scared capital. We take profits too quickly and we hold on to losers. And we justify them with all kinds of odd logic, don't we? So understand that there's no reward without risk. Everybody wants, I get the phone calls all the time. Hey, Doc, what kind of strategy would you recommend for me? I'm looking for something to give, a consistent return without any risk at all. I don't want to take any risk. I'm like, oh, I got something for you. It's called certificate of deposit. That's a perfect strategy for you. Money market funds. Yeah. And, people think I'm joking, but no, you're not going to get a return without risk. You have to look at risk as a tool, as an ally, as something to manage. You want more return? Take more risk, but understand how to manage risk. That's your job. It's a tool. So you got to quit taking trades that feel good. If your trade feels good, if you've analyzed it from every single angle and it really feels good and you really want to double up on a trade, think about it, because probably what's going to happen is you're going to be trading along with the rest of the herd. So your mind is a very powerful thing. It will listen to everything else out there, and you're going to get a raging case of confirmation bias by listening to the mainstream media, by listening to other YouTube personalities or people that, pundits. And if they all think the same thing, then what are you going to think? You're going to go, wow, man, this really feels solid. This feels like a great trade. This has a great chance of winning because all these other people said that it was going to win. When you go with the rest of the crowd, and right now this is particularly bad because of all the Wall Street bet stuff and all these newer traders that have learned nothing else but to socialize their trading. YOLO, I have diamond hands. Like it's just so ridiculous because I'm just, I'm waiting for these guys to get destroyed. And it's going to be the same old story. This is what we've seen for the last couple of months. So if the trade feels good, that means you're going with the crowd instead of thinking independently. So the converse of that is to think differently, is you're going to be taking trades that feel bad, and you're going to have to get used to that. Because what you're going to find is the trades that feel bad are more than likely going to be the ones that work out best for you. It's an odd concept. Again, like I said, you're not really trading versus the market. You're trading versus yourself, all your preconceived notions and biases. That's your obstacle. That's the resistance to your success. So step one, we have to think differently about risk. Step two, focus, focus, focus. All of the messages out there tell you to diversify. Well, yeah, you need a well-diversified quality portfolio with blended risk with blah, 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 blah. I mean, we've heard the same thing for years and years and years. And so what everybody does is they say, well, I've got 85 stocks on my active watch list that I'm looking at every day. And I'm like, my God, you can't do anything with that. You'll never specialize. You'll never focus. So what I tell people is you must specialize in one thing. Start off with one thing. If you can't get anywhere, if you're having difficulty, if you're stuck in the mud, wipe your desk clean. Bring it down to one strategy, one stock, one focus, one thing that you're going to do. Otherwise, you're going to be a jack of all trades and a master of none. So your competition is out there, and I've seen these guys too. You go to something like the CBOE, you go to the S&P pit, and there's somebody that stands there in the same 1 square foot block on the risers every day. They focus on one strike price, one series, 1 month, one option, and they know it cold. They know exactly what they're going to do with it. And that's partly your competition, right? They're going to specialize. They're going to wait for you to make a mistake, and they're going to jump all over you. They're patiently waiting for the herd to make a mistake and overcommit. These are the snipers. This is one extreme example. I'm not saying that everybody can do something like this, but that's basically what I had to do. I got to the point where, I had learned all 42 different option strategies, and I had 56 different positions going on in my account. And I had no idea what I was doing. It's one thing to enter. It's another thing to specialize and be able to understand where your edge is. You don't get edge by diversifying yourself. So most of us are not focused. We've got so many things going on. We're trying to work an active job. We're trying to, we're working from home. We got kids ringing the doorbell, mail's coming. And then on top of that, you got 10 studies in your chart. You're wondering if you should add more, right? So you're all over the map. You're hoping that the winners compensate for the bigger losers. And you're wondering why your competition is winning. Again, you're doing this as a hobby and not as a job. You got people that are professionals that you're trading against. So you've got to compensate through focus. You've got to get better by doing less. So this is what I always say. You got to find your one thing. And if you've never seen this movie before, it's got a movie called City Slickers, which came out, I don't know, maybe 25 years ago. Maybe 30 years ago, with Billy Crystal and a guy by the name of Jack Palance, who was Curly in this movie. And all I'll say on this, his advice to somebody that was kind of lost with himself is to hold up one finger and say, find your one thing. That's the only thing that matters. Nothing else matters. Find your one thing. And so this is my universal advice to retail traders, is go out there and search for something that you can call your own. And you'd be surprised how quickly that you can come up to speed and excel at something if that's all that you're doing. If all that you're doing is just doing one strategy on the S&P 500, maybe 2 or 3 times a week, that's all that you do. Before long, you're going to get a lot of experience doing that. You're going to see what it takes to drive a strategy and to get edge and to get better at something. Think about this, is that you want to be doing something again and again and again, and every time that you go through a circle of testing and making some adjustments and trying it again and seeing how that affects it and fixing problems, you're going to get this thing further and further up. You're going to raise some altitude. This will get you there much, much faster. So get better by doing less. Find your one thing. Okay, that's step 2. Step 3 is to define your edge. Most people don't know what an edge is. If I were to ask somebody in an elevator, oh, you're a trader, what's your edge? I don't know. I use Bollinger Bands. That's not an edge, right? So what is your edge against the rest of the market that you're choosing to compete against? If there is no edge, then you're just going to make the broker some more money. Now, there's no trophies, though. It doesn't matter how long you've been doing this. Do you have 10 years of market experience or 1 year of market experience times 10? Because you keep restarting and doing something different. Edge is not awarded by length of service. A lot of us think of this as personal combat, that if you win, you're taking something away from somebody else. So think of markets as just this big opportunity, just this big river of opportunity kind of flowing by, that you're going to take a little bit out and you're going to pay for that. And maybe you'll put a little bit in from time to time, but just think of it as just a big river of opportunity. Don't think of it as, Mortal Kombat, that if I win a trade, then somebody has to lose. But you have to have an edge versus the crowd. What is your competitive edge? When the crowd goes one way, what is your edge to either move with or against the crowd? Trend trading is a good example of trading with the crowd, right? So when we do something, but usually the entry for a trend trade is going to feel bad. Time decay is another edge. It's a proven edge where we sell options and we have time decay behind that. But understanding how to manage risk is so important to be able to keep your edge in time decay. Understand, guys, that chart studies are not edge. There is a mistaken perception that typical chart studies like stochastics or MACDs or moving averages or whatever are going to give you edge. There's just lagging indicators of previous price behavior. It's not going to predict the future for you. And that's not really our job, is to predict the future. What we're looking for is common patterns that show herd behavior. That's really what we're doing. We're trading against the rest of the herd. So the combination of method, mindset, and money management just might give you an edge against the rest of the market if you specialize in it. If you're just kicking the tires, if you're just trying something just for fun, that's a hobby. That's not a job. You'll eventually sponsor somebody else's account doing that. So the very best edge that you're going to find is being on the other side of the market from the investing herd. This is the most difficult place to be, and it might take you years to learn how to do this. Most people are social creatures. One of my favorite things to do is to sit in a football stadium with 100,000 of my closest friends and to watch a game, my favorite team. Love to do that. But that's suicidal if I trade the market and if I have the same approach to that. Hey, I'll just do what everybody else is doing. How are you going to get different returns from the rest of the market if you just do what everybody else is doing? You can't. You got to be willing to be independent. Step 4, quickly, what you need to do if you, those that fail to plan to fail, right? So get a business plan. The importance of getting a business plan is not just that you're putting a plan together, because most people put a business plan together and then stick it up on the shelf and they never see it again. It's to send a message to your brain that you're going to take this seriously. This means a lot to you. This is life and death to you. This is who you are. You're going to treat it like a business. And if you actually look at that every single day, you know, you talk to somebody like a Grant Cardone and you listen to Grant Cardone and he will actively tell you that he writes down his goals every single day. It's the same goals. He writes them down every single day. His subconscious mind has no problem understanding exactly what his function is for that day. It's not, you know, hey, I wonder what I'll do today. Hey, what should we trade today? No, it's none of that. Run your trading like a business. And then, of course, have a trading plan for that. For your one thing. You should have one trading plan for your one thing. Now, what I'm not saying, again, with the one thing, guys, is if you're an experienced trader, if you're doing well, then great. You don't need to worry about that. But if you're having trouble, if you've been kicking around for a few years at this stuff and you're like, man, I just don't know if I'm going to make it at this. If you're having just, you know, fits and starts, you do well for a while, then give it all back plus more. Narrow down to one thing. Find your one thing. A lot of people say, well, what should my one thing be? I don't know. Find something that gives you the rage to master. You've got to be obsessed by something. There's got to be some level or style or method of trading that causes you to go over the edge and get obsessed because you need that level of focus. That's step 4. Now, step 5, we're going to finish this up quickly here, is the strategy development cycle, which is that kind of that iterative approach that I talked about. Nobody gets it right the first time or the second time. So for most retail traders to quit after 2 losing trades means that they, you know, that's their inner dialogue saying, well, you're no good at this anyway. Not giving yourself a chance, right? So think about all the other analogies that are out there. Think about, you know, Tiger, when Tiger was playing, poor guy, hope he gets better soon. But, you know, when he was in his heyday, he would come off a round of 18 holes and maybe he's still in the lead or something, but he's still not happy with some element of his game. He'd go right to the range and work on that element. And who knows how many thousands of balls that he would hit on a daily basis. Or the guy that would sit there and practice 3 throws. Well, trading, you can do the same thing. You should learn from every trade, especially the losing ones. This is what I do with every strategy, is I will track my adherence to the rules. If I felt like at the end of the trade, the after-trade analysis said, whoa, man, I forgot to look at that moving average, or I forgot to look at this indicator, or I just ignored it because I wanted to get in on the trade and I couldn't be bothered to wait. Then I'll knock myself on that and say, oops. And this is where Pareto analysis comes into play. So keep score. Don't forget to keep score with this. And I can attest to this. It makes a huge difference if you actually track every day. Be a pro. Keep score. So you know if and how you're improving. What's your win rate? What's your profit factor? There's all kinds of ways to measure these things. But keep score. Don't be like, you know, when my son was first playing basketball, and this is when they were very, very young. This was, you know, this is the classic age of, you know, everybody at the end of the season gets a trophy and they didn't keep scores of the games. And that's not at all how I grew up. I mean, in 3rd grade, we were keeping score of basketball games. And yeah, when you lost, you were crushed. But it made you work that much harder to say, oh man, I hate that. I'm not going to let that happen to me again. Keep score for what you're doing if you're a pro. That's step 5. Step 6 is to build a trader's mindset. And this is all kind of wrapped together because if you do all these things, you will start to build a trader's mindset. You will think differently about that. You'll see things like, just to give you an example of how this permeates your life. A year ago, and it was exactly a year ago, we were in the middle of the pandemic and everything was shut down. There was nobody on the roads. What did my wife and I do? We went out home shopping. And in retrospect, that may have been the best trade I ever made in my life because now you can't get into a house. Any house that goes up for sale has got a bidding war on it like nobody's business. We were able to close on a house that had not even gone to market yet with no bidding war, no nothing. It might have been the best trade of my life. But thinking about how to do things differently, going against the crowd. Instead of doing the safe thing or the thing that feels good, all of a sudden the trader's mindset is looking for opportunities, not to undo people or to be cruel to other people or to win at any cost. It's not about that, but it's looking for opportunities to do things that don't feel right to the average person. It takes a different mindset to do that. So neuroscience is one way to do that. This is neurolinguistic programming. And if you haven't learned about it yet, you will, because this is, again, like I said, you're not trading versus the market, you're trading versus yourself. If you have results that don't make sense to you, this is because you're neglecting what's going on inside the belief system of your subconscious mind. And this is a Tony Robbins thing. What you focus on expands. The subconscious mind has no filter. If you say to yourself, no more losing trades, that's it. Today, no losing trades. And that's what you'll get. You'll get more losing trades, which is going to frustrate the living hell out of you. Trust me on this one. This is one, what is going on? Why am I doing this? And I had to study it. I had to understand how the brain works, to understand these maddening results that I was getting. Like, what the hell? Why did I just do that? I wrote, I would staple something to my forehead, like, don't take a trade against this moving average. And then I just could not help myself. And it's because of the subconscious mind. So if you don't get results that you can explain, it's this going on. If you say to yourself, no more debt, what are you going to get? You're going to get more debt, right? So stop pushing the string across the table. Learn to pull on it. So you've got to retrain your brain. The subconscious brain is the core processor of your most basic decisions. It's this inner voice that thinks that risk is bad, but you just can't jack something in the back of your skull like the Matrix, right? Wouldn't that be great? Like, I know Kung Fu. I love that line, right? You've got to do the work and internalize your one strategy, which is, again, the reason why I say do a business plan, because it sends a very subtle but powerful message to your subconscious mind that, hey, whoa, boss upstairs really cares about this stuff. You must be taking it seriously. You got to prove to your subconscious mind that it's not harmful, because right now, every trader that starts trading, it's fun at first, but the first loss that you take on there sends a message to that subconscious mind, oops, this is dangerous. You can get burned doing this. You have to retrain your subconscious mind. Okay, and step 7, and the final step here, and then we'll wrap up unless there's any questions. Success is not a step function. I keep saying this, right? So it's not you just wake up one day and all of a sudden you're awesome. You wake up and you're awesome. You can't explain how it happened, but look, get over that. That's not going to happen. It's going to be a series of little tiny steps, just a million of these little tiny steps. It's almost like that suit of armor that they had in the Middle Ages, the chain, the chainmail. is what it's called. It's little hooks, little wires and hooks and everything like that. And it must have taken him months to put together one of those, one link at a time. And that's kind of what you have to do, is that it's not going to be just one big step function. It's going to be a series of little tiny steps and habits. So here's a couple of things to think about with this. You do not rise to the level of your goals. So a lot of people say, well, I've got these lofty goals that are out there. But Scott Adams, who is the creator of Dilbert, has got that hooked up. He's like, goals are for losers. You've got to have a system. A system, what happens is goals, everybody, you can't achieve your goals through just desire. This is what happens, is everybody gets all jacked up, writes down their goals in some kind of a workshop format, leaves, gets on an airplane, and by the time they get home, all of a sudden, the baby's crying, the car needs work, another bill came due, and all of a sudden, everything's gone. Because you don't have a system. You're doing this emotionally. You're doing it on just this level of drive, and it will come and go. So goals are those for want to win once. Systems are for those that want to win repeatedly. Decide the type of person or role that you want to be. Prove it to yourself with small wins. So look at somebody and say, I want to be like that person. What does that person do? Then emulate that person. Act like that person. Do the same things that that person would do. Every habit that you take is a vote for the type of person that you want to be. Habits are enormous. They're enormous. This is what we do every single day. This is what we do every single day. Hello, Edgar and Willis. Thank you for joining us tonight. So if you want to be a profitable trader, what would a profitable trader do? How would they act, and what habits would they display? Think about that for a second and then try to come up with that answer. And then lastly, look for the small wins. Becoming a profitable trader is not something, again, that happens in one day. You got to push that stone up the hill many, many times before you can roll it over the top. It comes from the aggregation of these small incremental changes to your actions and thoughts over time. As long as you know me, as long as I'm going to be in a position to do this, I will come back and say the same things again and again and again, because I have lived this. I have gone through this transformation. It's not easy. It's not for everybody. And it's only for the committed, the ones that are willing to think independently and to change the way that they think and to be a different person. And this does not happen overnight. This is the aggregation of marginal gains. The human mind craves steady progress, even if it's slight and almost imperceptible. We crave steady progress. All you want is just a win. Just give me a win, right? It's like playing 18 holes of golf, right? You can absolutely stink up the course all day long, but you remember that one 7-iron that you hit from 150 yards and you stuck it on the green within 3 feet. That will bring you back next week, right? Go for the small wins. Okay, so that's the 7 steps. So just a quick summary here. Learn to think differently about risk. Narrow your focus to one thing. Define what your trading edge gains. So do all that stuff. Okay, I guess we're going to wrap things up.